Alright, so today we'll be talking about daily bias. It's really easy, 3 steps, nothing more, nothing less. This is going to be the one and only video that you will ever need to be able to build the bias, right? So, what is daily bias? Right? Probably thinking like, what is daily bias? This, then, the third, blah, blah, blah. Daily bias is just the expectation on where you believe price is going to be delivered to. What are your expectations? What do you believe the market is going to go? Is it going to continue to trend up? Is it going to continue to trend down? And that's what bias is. It's an expectational direction. Right? I feel like I spelled expectations wrong, did I? If you watch my last video, you understand I can't spell for jack shit. Excuse my French. So, daily bias is just having an expectation on where price is going to be delivered. Is it going to continue to go up? Is it going to continue to go down? Is it going to feel an imbalance? Is it going to go grab excuse me. Is it going to grab liquidity, or is it going to hit your indicator or whatnot, right? Alright, so there can only be 2 biases, or I guess you could say 3, exactly mixed in with our trend, right? So the first one, it's going to be the most common one, is that you have a bullish bias. Feel me? That means we're in an uptrend. That you believe the fuel will continue in an uptrend. That's what you believe, right? The second one is going to be you have a bearish bias where it's going to be continuing a downtrend. The third one, consolidation. You believe the price is going to move choppy for the day. It's going to move sideways. It's not going to have too much enthusiasm, not much volatility, right? And you're probably wondering, okay, so now that we know what the daily bias is, and there's only 3 biases that we can have for any given day, which is going to be bullish, we believe price is going to deliver higher. Bearish, we believe price is going to be delivering lower today. Consolidation, price is going to move choppy. Alright, boom. So why is this important to us? You know what I'm saying? Why do we need a daily bias? Why do we need a daily bias? That's like going to the gym and not understanding what kind of workout you're going to be doing. Going to the gym, no plan, no vision, no structure. You're just show up at the gym. No, that's a formula for failure, right? You want to go in there having the expectations, okay, today I'm going to be doing a push day. Today I'm going to be doing pull, back, shoulders, whatever. You want to have these expectations so that way your trading strategy would have more structure to it. If you don't have a bias, you should not be trading. If you're not in one of these 3 categories, you shouldn't be trading. And if your bias is consolidation, you shouldn't be trading. So why do we need one? Is because it gives us the foundation for the strategy. It gives us our first confirmation to any strategy, right? Like, this is the first step, is understanding your daily bias. It gives you that foundation, that structure. So why do we need a daily bias? Helps us I hate that I can't spell. I'm gonna get this right. Confirm. Once you're able to confirm your structure, the bias on where you want price to deliver to, everything else is going to come significantly easier than that, right? Once we understand, all right, we're gonna go into the gym today. We're gonna hit push. Now we understand what needs to come into fruition for us to do push, right? You're gonna go in there. You're gonna pick your first workout you're gonna do, and then you're gonna pick the second rep, third workout set. How many you do, right? So bias is gonna be the first thing too. It's just the first step. It's pretty much putting everything together. Like without your bias, without understanding where price is gonna deliver to, you have a failing strategy, in my opinion. Not understanding where you want price to deliver and you're just moving with the trends, oh this, that, and the third, that's a success for failure. That's what I have done, and I've blown multiple accounts, just waking up, no structure, no bias, and just doing it. No, you have to be understanding of what market structure is in, where price wants to deliver. That will help you with your overall strategy, right? So now you're probably thinking, okay, now we know what a daily bias is where price is going to direction to. Now we understand why it's very important because it helps us with structure. And now we got to talk about how do we go about establishing our daily bias. All right, how to establish daily bias. And it's 3 easy steps. 3 easy steps, and we're going to show you exactly how to apply it in just a second, right? So the first one, every single day there's always going to be a new bias, and this is how it becomes super easy, right? So the first step, where did price open for the day? You know what I'm saying? What is the opening price for the day? Where's the opening price for the day? To be able to figure out what is the opening price today, mark out horizontally at midnight open. Midnight open, right? So if it's like a bearish candle, let's do bullish candle. Bullish candle, it's gonna be the bottom open of that candle. Bullish candle is going to be the bottom open, right? Let's not confuse this. We're gonna break this down in just a second. Bearish candle is going to be the top open, because the candle only has 4 aspects to it. So you're probably thinking, Angel, now we got it. Now we know exactly where price opened at midnight open. We know exactly where it's at. You know what I'm saying? No, we know exactly where it's at. What now? What do we do now? Wait, Timmy. So now that you understand what the market, what the price opened on that day, now the second thing is you got to ask yourself, is price respecting or rejecting? I actually jumped ahead. The second part is, are we trading above or below daily open? Are we trading above daily open or below daily open, right? Because if you're trading above daily open, you're not going to be wanting to go long. And the same vice versa. If price is trading below, you don't want to be looking for long positions. Why? Because if we're trading above daily open, that equals that price is in a bullish. Is bullish. Price is bullish. Because it's trading above market open. Where it opened is trading above that. Meaning, okay, we are bearish. We can expect to go long this day. Alright? And if we're trading below daily open, we can signify for bearish. We can be looking for shorts. Alright? You see how this is now starting to be, it's all starting to come together. It's all coming together slowly. You see? So now that we have established what price is, we have established that price is trading above daily open, so we're bullish. We can expect price to continue to deliver higher unless there's high news, liquidity gets swept, variety of different issues. You know, the market is not always perfect. Your accuracy would never be 100%. If you do, please share me your strategy. I need that ASAP. Right? Alright, so now boom. We understand what price opened at. We understand if price is trading above or below. Now we got to start asking ourselves questions. We have to start getting an understanding of what price is doing. So right now ask yourself, is price respecting or rejecting daily open? Right? And if you're brand new, you're probably thinking, what do you mean by is price respecting a daily open or rejecting a daily open? You know, this may be a foreign concept for some, right? So if price is respecting the daily open, then it's going to come to it, bounce, and continue that rally in whatever trend that it is. If we're bullish, price comes down, respects daily open, and creates new higher highs and higher lows, continuing that trend, showing that the buyers are in control and do not want to go lower than that daily open. All right, so if respecting, price is going to be bouncing. Price is going to be bouncing off daily open and continue to make higher low, higher highs and higher low if bullish, right? And there's going to be the exact same thing for the bear side. If price is going to come up, it's going to come up, touch that, and then it's going to drop down and continue to make lower lows and higher lows. Because price is bearish. We want to see it respect daily open. If you see it respect that daily open, then you should be even more confident in your daily bias and understanding on what price wants to do. But that's not all. Now we gotta start asking ourselves, what does it mean by rejecting? Right? Rejection. Price dips above or below daily open, DO, or daily open, however you prefer it, and continues. Dips are above or below and continues. That's how you know, like, yo, this bias might not be, this might be a fake out. You know what I'm saying? And it continues to rally, it continues in a market structure. That's how you understand that there is a rejection. It's a support and resistance. And price is rejecting. Now it wants to continue to keep going up. So let's say, for example, we're bullish, right? We're a bullish example. Price dips below daily open and continues to rally and continues to sell off. You know what I'm saying? The same thing is for a bearish example, but just opposite. Don't want to overcomplicate it. Price trades above daily open and rallies higher. Rallies higher. That's how you understand that price is, your bias is going to switch. Once you see price trade above and it wants to stay above, you can switch your bias and start looking for long opportunities. But that's, you got to be hyper specific. You have to understand your strategy, why you're trading it, how to trade it. Understand that there's different metrics. Everything is not going to be looking the same. Right? And a quick recap before we jump into how to find it is, what is it? What is a daily bias? Bullish bearish consolidation. Why do we need it? It helps us with building more structure for our trading strategy. And then 3 easy steps on how to establish it. What is the opening price? Are we trading above or below? Is price respecting or rejecting? That's it. That easy. You could do this on any time frame. Ideally, I personally like the 15-minute time frame. It's the best one to do it. Now let's go look for some examples, right? So we're on the 15-minute chart. Today is Monday. We're going to do it right in today. We don't got to go too far. So we're at 0-0. Price is trading right here. We're going to find the opening candle, the open of that candle. We're going to zoom in real close. So as you can see, this is a bearish candle. So what we're going to do is find the top of it right there. And then we're going to mark it out as our daily open. And look at this. By 8:30 a.m., what is price doing? Price has traded above, respected, and came down. Respected it again, radically lower. Price traded again, came up, rejected. As you can see, it's not rocket science. It's pretty simple, but this is just one building block to the others. And I actually completely forgot to add that you always want to do it by 8:30 a.m. You want to understand what the market structure is. You want to have your time zone, kill zones. Something I forgot to mention is that by 8:30, understand these things. I apologize if I do speak fast. So as you can see, opening price trades above it, fails, comes back down, respect, tried to trade back up, and failed again. Meaning we are respecting the sell side that is in control. So we should be looking for short opportunities. Price rallies down. Right? You're probably thinking, it can't be that easy, right? Let's try it again. Alright. Right here. We can just go right to the next day, right on Friday. And keep in mind, this is live, December. Right? So we come in, 8:30. Where's that opening candle? So now this candle is bullish. So now we're seeing a bullish candle here. So what are we going to do? Mark the bottom. Daily open. By 8:30, we see it dip down. This is for more advanced stuff. Don't pay attention to this. This looks all different. As you can see, price is trading above. It's respecting the daily down, meaning it does not want to go lower. And if it goes lower, it'll be a Judah swing, a fake out. Excuse me. So we can understand for this day, right around 8:30, we're seeing price be trading above and it's respecting the daily open, meaning we can be looking for long opportunities. You don't want to be going short when the market is showing you bearish signals, right? And as you can see, price dipped below at 8:30 and came right back up. And it didn't trade again lower than that, signifying that this was a bullish day. This one, bearish. Price is trading below it and respecting. Price is trading above it and respecting. All right, let's do one more just to drive it home. Let's go pretty far. We can do it on anyone. This is NQ, right? Now we can go ahead and drop to ES. Same thing, man. Easy stuff. And it's not always going to be perfect. I'll tell you that. It's not always going to be perfect. That's why you need multiple confluences. See? Here, as we can see, price was trading below. Price was actually trading choppy that whole time, but it went up. So as you can see, like, it works, but it's not gonna work every single time, every single time, every single time. Nah, but it's gonna work most times. I'll tell you that. It's gonna work most times. And I mainly like to trade NQ because it has so much volume that these candles just significantly just look so much better. I just love NQ over anything else. So let's do Tuesday since this is the first one. This is gonna be our last example here. Right? Boom. Bottom. Where's 830 at? Okay, boom. So as you can see, price is trading at midnight open. Price trades below it just a little bit. It just dips below it, but it fails to continue. It doesn't want to continue to keep going more, meaning it's respecting this daily open. It doesn't want to go down, and it's not gonna be perfect every single time. Price isn't gonna touch that level and bounce back up. No, of course not. The market is not gonna move like that. It doesn't want you to make that much money. It wants you to make money, but not that much money. In fact, it wants to take your money. So the point is understanding what daily open is. Midnight open. Price is consolidating. Price dips. Fails to continues. Comes back up. Retests. Respects it. And rallies up. So by 8:30, what are you doing? Looking for long positions. By 8:30, by 10:30, you're done. Look at that. By looking for longs, you can find an opportunity in there, depending on your strategy. There's somewhere in there. Make some money. So that's the homework. Mark out your daily open. Is price trading above it? Is it respecting? What is it doing by 8:30 a.m.? Figure it out. Test. Back test. You're not gonna watch one video and understand it. You have to back test. Watch it over and over again. You don't have to watch it over and over again, but test your strategy out over and over again. Make sure you get it right. Be on your A game. These markets are a reflection of who we are as a whole. If you're not someone who is disciplined and gonna put themselves to understanding and learning the market, sheesh. This is what it is. Trade price. Thank you for watching. Good luck on your trading journey. Good night.